Yeah, very good afternoon, viewers of today's VCM on introduction of the tools and techniques for conducting statistical research, being hosted by Jabalpur branch of CIC of ICAI. We have the presence of Honorable Worthy Chairman CA Anuj Goyalji. We have presence of hosting branch Chairperson Madhu Ma'am. We have other office bearers, including Manish Kaushalji, past Chairman, Ashish Agrawalji, past Chairman, Sukesh ji, and we have Ashish ji with us, and Dr. Kavita ma'am, the learned speaker of the day. So with these words, I request Madhu ma'am for her formal welcome address.
Thank you, Dr. Amit Agarwalji. Very good evening to all of you. It is a matter of privilege to hold the VCM under research committee. The beautiful thing about learning is that nobody can take it away from you. Today's VCM is the platform for the same. In this journey of online learning, I would like to welcome C. Anuj Goyalji, Central Council Member and Chairman Research Committee ICAI. We have been associated with Sir since long, and Sir is one person who is ready to help you every time you call him. सर के लिए कहना चाहूंगी, निकलता है रोज सूरज ये बताने के लिए कि रोशनी बांट देने से उजाले खत्म नहीं होते. Our session speaker, Dr. Kavita ji, who is Associate Dean, Research and Business Analytics and Operations. Ma'am is an expert in her field with over 22 years of experience. Welcome, ma'am. Heartfelt welcome to CA Pramod Kumar Booth, sir, Central Council Member and Vice Chairman, Research Committee, ICAI. Special mention to CA Amit Agarwal ji, CA Sukesh Chauradia ji, CA Ashish Agarwal ji, CA Manish Kaushal ji, and all the participants. I welcome all of you to today's VCM on the topic, Introduction to Tools and Techniques for Conducting Statistical Research. Hope all of us will be benefited by today's VCM. Stay healthy, stay safe. Thank you.
Thank you, Madhu ma'am, for your very warm welcome extended to the viewers and the dignitaries present. We are very thankful that opportunity is given to us that your branch is hosting this mega event. So now I request Vice Chairman, Jabalpur branch of CIC of ICAI, CA Sukesh Chauradia ji, to introduce our learned speaker of the day, Dr. Kavita ji. Over to Sukesh sir.
Thank you very much, Anuj. Our learned speaker for today is Dr. Kavita Jagadish Kalyan Durga. She has done her PhD from Golden State University, USA, the thesis being top knowledge management technique for productivity enhancement in the manufacturing industry. She did her MSc Statistics from Karnataka University and stood second rank. MBA Marketing from Mysore University, BSc Statistics from University of Karnataka, being a gold medalist. She did her PG Diploma in Computer Applications from Bombay Technical Board. She also did Diploma in Entrepreneurship from EDI Ahmedabad. She is a professor in Operations and Analytics with over 22 years of experience in teaching, research, consulting and education management in the subjects, namely quantitative techniques in management, business statistics, operations, research methodology, market research, etc. Her core research and consulting areas include market research analytics, measurement of variation in business processes, behavior analysis, predictive analysis, regression analysis, customer segmentation, modeling. She has published over 25 papers in national, international journals to her credit. She has an industry exposure of more than a decade in managing projects and education management. She is an editor for David Publication House. Her professional affiliation includes Confederation of Indian Industry, All India Management Association, Entrepreneurship Development of India, etc. Today, she'll be taking us with the topic Tools and Techniques for conducting statistical research. We welcome you, ma'am. Thank you very much.
Thank you, Sukeji, for giving us a insight about the profile of today's learned speaker, Dr. Kavita. Now, I request Kaushal sir, Manish Kaushal sir, past chairman of Jabalpur branch of CRC of ICAI, to kindly introduce our chairman, C. Anuj Gupta. You are on mute, sir. Kaushal sir, you are on mute.
Now, am I audible? Sir, thank you, Dr. Amit Kumar Agrawalji. I am told to introduce Shri Anuj Goyalji. Mr. C. Anuj Goyalji does not require any introduction. We are very lucky enough to have his wholehearted support to Jabalpurians. He has visited so many times, and whenever we need, we find him near around. But just to follow the protocol, I formally introduce him. C. Anuj Goyal is a Central Council member of the Institute of Chartered Accountants of India. With his 14 years in Council, 3 years in Regional Council, 6 years in Branch, he contributed immensely in various capacities. Presently, he is Chairman of the Research and Development Committee, Children's Committee, the oldest committee of the ICAI, Capital Market and Investors Protection Committee of the ICAI. He is also Vice Chairman of the Corporate Law and Corporate Governance Committee. With the explanatory academics, he passes CA, CS, ICWA, LLB, MCOM, Visa, and DIRM. We welcome Mr. Anuj Goyal, sir.
Thank you, Kaushal sir, for giving a brief intro of our chairman. CA Anuj Goyalji, as rightly said by you, is a member of all the three institutes. And let me share some of my experience with him as a secretary to the committee. Last year also, he was the chairman of research committee. And you will feel that his visionary guidance and leadership. Last year, this committee, the oldest committee, technical committee of the ICAI, way back in 1955, it was formed. But last year, tremendous work has been taken up. International Research Award is one of the beauty of last year milestone. Doctoral scheme, research project scheme. And I would like to share with all of you that I think this comes through the experience. And because I served with him in more than 6-7 committees as a secretary, and he was the chairman. So every year we found new things, new ideas, and some sort of zeal to do something new and good to the profession. And this is all because of his experience in the regional level, branch level. 6 years he was the chairman. He was in the managing committee of Ghaziabad branch. At the same time, he was chairman of the ICSI chapter, ICWA chapter also. So all the three institutes he has served at the age of 22 years. So I think a vast experience he has, and that speaks in actions also. And a lot of work has been done. And to display this information to our members for betterment of the profession and for better participation, inclusive participation of our members, I would request my honorable chairman to express his opening remark and guide us how to inclusively we can do wonders this year. Over to chairman, sir.
Thank you, Dr. Amit Kumar Agrawalji, our very, very young and dynamic secretary of the research committee. On behalf of the Institute of Chartered Accountants of India and on behalf of the research committee, I welcome our honorable resource person of today's virtual CP meeting hosted by Jabalpur branch, very, very prominent branch of Central Region, Dr. Kavita ji, who is going to take very, very important topic, not only for the profession, but also in turn when the chartered accountants will be using. I think it will be very, very important for the nation also. Introduction to the tools and techniques for conducting statistical research. And of course, I welcome on behalf of the Institute of Chartered Accountants and on behalf of the research committee, Honorable Chairperson of Jabalpur branch, CA Madhu Agarwal ma'am, and our Honorable past Chairman, C. Ashish Agarwalji, our Honorable immediate past Chairman, my brother C. Manish Kausalji, and of course C. Sukesh Chodriya our Honorable Vice Chairman of very, very prominent Jabalpur branch, and all other members of the Jabalpur branch, all the members of the central region, and we are having the presence of around 5,000 chartered accountants in this webinar from each and every part of the world. So that shows the commitment of the chartered accountants for the knowledge enriching activities in this time of a pandemic also. And I am really very happy that in spite of this corona pandemic, our members of the Institute of Chartered Accountants of India are ready to accept this challenge, and practically they are converting this great threat to mankind into an opportunity to serve the mankind by updating their knowledge on day-to-day basis, and by this they will be away from the negative thoughts and negative news which is there everywhere, whether it is social media or the electronic media. And when we will be updating our knowledge, the chartered accountants who are the best accounting professionals across the globe, it would be really good for themselves, for the profession, for the society, for the trade and industry, and of course, ultimately for the nation. And when we do talk of the 5 trillion economy target of the Prime Minister Modi, I think only and only when our chartered accountants who are the best accounting professionals across the globe will putting the best will be contributing, then only I think we will be in a position to reach to that dream of the Prime Minister Modi. So I once again welcome all our honorable viewers. Around 5,000 viewers are there from each and every part of the world in this very, very important webinar, Introduction to the Tools and Techniques for Conducting Statistical Research. And I hope that you all are safe and sound at your place. Friends, in this wonderful journey of 71 long years in the service to nation, ICAI, the Institute of Chartered Accountants of India, has always worked for the best of all its stakeholders, aided the government in its endeavors, and always been a partner in nation building. The Institute has achieved recognition as a premier accounting body, not only in the country, but also globally, for maintaining highest standards in technical and ethical areas. At the outset, I would like to mention that the Research Committee of the Institute of Chartered Accountants of India is one of the oldest technical committees set up in 1955 with a view to undertake research activities to improve the quality of services rendered by the profession. Friends, research has been integral to accounting profession. Since the formation of the Institute, and against this backdrop, the Research Committee has come up with this virtual CP program on Introduction to the Tools and Techniques for Conducting Statistical Research. Before going into the nitty-gritty of today's session, I would like to mention some of the initiatives of the Research Committee which Dr. Amit Agarwalji, who was the secretary last year also, and I was the chairman of the Research Committee last year also. I think these initiatives will be very, very relevant to the members at large. So first initiative which we took last year was ICAI Doctoral Scholarship Scheme. Friends, it is open for all the members of the Institute who are pursuing PhD and are not more than 40 years of age on the last date of application. The ICAI Doctoral Scheme, Doctoral Scholarship Scheme aims to provide scholarship to the eligible candidates having outstanding academic record in 10th and 12th standard and an inclination and commitment to undertake research in the field of auditing, accounting, taxation, commerce management, and accounting discipline. The scholarship of rupees 50,000 rupees per month for 3 years will be given to 5 scholars. So there is very, very stiff competition, and the last date of submission of the application has been extended till 31st August. I will request all the viewers, all the members of the Jabalpur, and of course the office bearers of the Jabalpur branch to see that how we can have the best of the research scholars for this ICAI Doctoral Scholarship Scheme. Then last year itself, in spite of the fact that last year was also badly affected by pandemic corona, we introduced for the first time in the history of the Institute a research project scheme. ICAI Research Project Scheme is open for members having experience of more than 10 years, either in practice or in employment. The maximum amount of rupees 10 lakhs will be reimbursed to the eligible research projects. The applicants will be given the time duration of 6 months for completing the research projects after the research proposal is approved by the research committee. And this ICAI research project scheme is open around the year. And friends, I am really very happy to share with all of you that in spite of Corona pandemic, last year we approved 7 research projects, and all the 7 research projects were completed within the given time frame of 6 months. And all those research projects were very, very good for the profession and for the nation. We have submitted the research findings to the various government departments, state governments, and the central government, so that we can really prove ourselves the real partner in nation building, which was, of course, communicated to the outside world by none other than our past president of India, APJ Abul Kalam ji. Friends, a very, very great initiative, ICAI International Research Awards. Last year, we initiated this International Research Award, which could be considered as the world's largest cross-border competition, with an objective to encourage and provide recognition to research scholars across the globe and their contribution in fostering research studies leading to innovation and value creation. The scope of the awards would be to identify the topics of international and societal importance, encompassing areas of accounting, auditing, economics, finance, and taxation. The last date for submitting published research papers for ICAI International Research Award is 31st May. So I will request all the delegates and Dr. Kavita ji also to please disseminate this information so that we can have more and more nominations. Last year, in spite of the year affected by the Corona pandemic like anything, we got close to 100 nominations and from more than 10 countries of the world. And I think the best of the researchers was the part of that ICAI International Research Award. This year we are planning to have it in Dubai, where we are having very, very strong presence of the members of the Institute of Chartered Accountants of India. Madhuji, we must be having around 20,000 chartered accountants in the Gulf countries. And if the Gulf countries are progressing like anything, I think there is very, very important contribution of the members of the Institute of Chartered Accountants of India. France, practically no country, no good economy can really go ahead unless and until there is very, very active contribution of the members of the Institute of Chartered Accountants of India. So ICAI Awards for Excellence in Financial Reporting. ICAI through its research committee has been making sustained efforts since 1958 to promote high quality financial reporting through the annual awards competition, ICAI Awards for Excellence in Financial Reporting, wherein the entities are being recognized for following sound financial practices amongst their peers. The awards are open for the corporates to submit their annual reports in order to recognize and encourage excellence in preparation and presentation of financial information. Last year, we had received the highest number of entries for the awards in spite of Corona pandemic in the last 7 years. Highest number of entries we got. This year, categories of the awards have been revised. A new category of municipal body has been incorporated. The last date for submitting the entries is 30th September 2021. So I will request all the delegates, all the members of the Jabalpur branch, all the office bearers, leaders of the Jabalpur branch, and all the delegates present from each and every part of the country and outside country, also around 5,000 delegates we are having, to see that how we can have more and more entries for the ICAI Awards for Excellence in Financial Reporting. Friends, ICAI has always dealt with hardships and responded to times of crisis. Every challenging circumstance which presents disorder and fear is the best occasion to learn more and fear less. Amidst the chaos caused by the global pandemic COVID-19, ICAI has come up with several enabling measures and initiatives to promote knowledge as the ultimate weapon. The Institute has always remained at the technological forefront. ICAI has always been keen towards adapting and upgrading the skills of professionals in tune with changing requirements. We understand the importance of knowledge sharing for not just individual enrichment, but for all-round societal benefit. It is rightly remarked that research is to see what everybody else has seen and to think what nobody else has thought. Research goal beyond the process of gathering information. Rather, it is also about finding answers to unanswered questions as part of discovering and creating new knowledge. To be future ready, professional chartered accountants should learn and equip themselves in new age technology, research and other skills besides continuing their in accountancy, finance and other allied areas. The subject statistics is widely used in almost all the fields. The role of statistics in research is to function as a tool in designing research analysis, its data and drawing conclusions. While doing research in the above fields, the researchers should have some awareness about using the statistical tools, which helps them in drawing rigorous and good conclusions. The most well-known statistical tools are the mean, the arithmetical average of numbers, median and mode, range, dispersion, standard deviation, etc. There are also software packages like SAS, SPSS, which are useful in interpreting the results for large sample size. A multitude of different statistical tools are required, some of them simple, some complicated, and often very specific for certain purposes. One should have the skill of selecting a statistical tool for their research which renders good conclusions. Therefore, today, through this VCM, we are going to take a dive into the tools and techniques for conducting a fruitful statistical research. With this, without taking your further time, I take the pleasure in welcoming the dynamic speaker of the day, Dr. Kavita, Associate Dean, Research and Business Analytics and Operations, WE School, to fine-tune the concept and enlighten our knowledge with her words of wisdom. And as I conclude, I will request once again to all our honorable viewers, I think we are around 5,000 viewers from each and every part of the world, to see that how we can be at our home, particularly in India. This second wave is very well there. Of course, the number of cases are coming down, but still, I think we have to take very, very good care of our family members and our nears and dears. I will request all of you to see that how we can have the vaccination at the earliest. Institute of Chartered Accountants of India is trying its level best to see that how we can have vaccination drives. I think at Jabalpur also we are trying to have the vaccination drive for each and every member and their family members, so that we can have fight from this pandemic in a better manner. So without taking your further time, I once again welcome all our honorable members, all our honorable delegates from each and every part of the country and outside country, and Dr. Kavita ji, and of course our leaders of the profession from Jabalpur, the chairperson Madhu Agrawal ji, Sukesh ji, our honorable vice chairman, CA Manish Kausal ji, past chairman of the branch, CA Ashish Agrawal ji, and all our honorable members of Jabalpur branch, and Dr. Amit Agrawal ji and CA Amit Agrawal ji. So thank you very much, friends. Over to Dr. Amit Agrawal ji.
Thank you, Chairman sir, for your nice words of wisdom and giving and sharing the information of the initiatives taken by the research committee. That it is for larger interest and receiving more number of participation for various entries and for the benefit of the members. And at the same time, you have paved a path what is going to be deliberated in the whole session. In very nice words, you have taken up that portion also. So that speaks your experience. Because I served with you in most of the committees where you were the chairman, and 15 years you have spent in the council of the ICAI, and having the great scholar, having the all three qualifications. I think really this matters a lot. Whether we have a leader like you as a chairman, we are very fortunate to have you as the chairman of this committee. And with these words, so not taking much time, I request Dr. Kavita ji for her deliberation. Over to Dr. Kavita.
Namaste. I'm honored, and can you hear me? Am I audible?
Yes, please.
Yes.
I'm honored and privileged to be here amongst you, the most brightest CAs. Thank you, Chairman, and Madhu ji, Sukesh ji for the nice words, Manish ji, and all of you. So before I start my lecture or webinar, So I just want to share my screen, and I also want to thank the chairman for announcing those awards, and definitely I will help you getting people on the board. So I'll share my screen now. Read.
Your screen is coming, but PPT, I think you have to share. Your computer screen is coming. Yeah, now it is there. Yes, yes.
Yeah.
Yeah. Now it's okay. Yes.
Thank you.
Full screen. Yeah.
So let's begin with the statistical method for research. Let's say what Florence Nightingale has said about statistics. To understand God's thoughts, he has proposed we must study statistics to measure of his purposes. So with this, I'll start my agenda for the day. Why statistics for research? And though statistics is, we are talking about statistics for CAs or finance, basically. Both are very well versed with the numbers, and still many of the CAs are scared to use statistics. So today I will bring out a lot of case studies on the your own interest. So we'll talk about why statistics for research. Second is role of statistics. Actually, the role of statistics begins prior to the data collection. Normally, with this experience, under me, five to six students have already done their PhDs and six have registered fresh. So I'm guide for 5 universities. So I've seen that they will jump to the questionnaire and then they want to make the analysis, which is the wrong method. So first they have to understand the role of statistics before even they start the collecting the primary data. So in your case, you might be having more or less the secondary data. So then this problem will not be there because the data will be reliable. So impact of statistics for research design. So where do I use research statistics in the research design and why? Let's discuss that. Then how do I relate the questionnaire to the data types? Like a lot of questions are there. How do I combine those questions to make my analysis? Next, coming up with choosing appropriate statistics. Statistics is mainly of two branches, descriptive and inferential. We'll see that what are those. Though you all are knowing mean, median, mode, as sir has just now told that these are very, very simple, and how do I apply those things? Then coming to the inferential, in every time we can't go for the entire population. Say, for example, around 4,000 companies are there. You want to choose the best amongst the 4,000, say 50 companies to choose your portfolio. So you want to test the hypothesis and draw a conclusion. So you will use inferential statistics. So we'll see that. Then descriptive statistics, case studies. Everybody is fond of, I believe, Asian Paints and consignor companies. So we'll see that using Excel. How do we do that? And then simple quartiles, apart from being median mode, these are measures of tendency, central tendency. So measures of dispersion are also very good, like variance, standard deviation, sir has already mentioned. So I've added to that the quartiles because all the companies will be using first quarter, what is the result, and usually the stock market or the companies will be doing better in the month of June to December, according to the past results, because India is a country based on the agriculture. So many things happen till the December. So let's see those things. Then applications of quartiles. So quarter wise, let us see how to analyze your mutual fund returns. Now we have causation and correlation. Like how do I define my correlation? Is there any cause and effect, or is there? It's just like happening the way it is not to be happening. Then we'll also analyze the correlation using scatter plots, using Excel. So you don't have to manually calculate anything. As sir has mentioned, you have SPSS, SAS, and Minitab, and MATLAB, Stata. So many softwares are there. So most of them are 14 to 15 days available free download. So you can use those things. Public Tableau is also there for graphs and all those things. So now after that, once you collect the data, and very important thing is you need to test for reliability. Today I'll show you how to do it on Cronbach Alpha. I don't know how much time I'm going to get because its session is only for 1 hour. So I'll try to make most of that. Then how do I forecast using regression called as for the company case study, Asian Games. This is the case study. Now let's begin with the fundamentals because everything moves around the fundamentals. If you understand the fundamentals, you will create an interest. How do I use statistics in that? So why statistics and how does it impact research? Am I too fast or is that okay? The voice and everything. Can I see some thumbs ups or?
Yes, everything is okay. Yeah.
Yes, ma'am.
And you are having sufficient time. You can very well go up to 5:45 p.m. You don't worry, you are having sufficient time at your command.
Thank you so much. Now, how do I define statistics? The one definition of statistics you all heard is collecting the raw facts, tabulating that or classifying the facts, then analyzing the data, and you prepare your reports. Everybody knows that this was the statistic definition you heard in your graduation and below graduation, right? So second thing, very important, I came across my master taught this. Dr. Taguchi is the management guru in the manufacturing industries. So he gave this very important definition. This I got through my master, Dr. Gondlekar. So statistics is the measurement of variation. So what do I mean by that? If you study the variation or variance, what happens actually and what happens theoretically. So practically and theoretically, there is a huge difference what things happen. You may predict that this company is going to do very well. You never know the pandemic has come and there is the company is not able to do it. So second thing is management. Why for management statistics is used? Management is control of variation. So management always wants to reduce the variation so that it can make it profits. So this is another important definition I came across and wanted to share with you. With this, we'll go to understand the role of statistics for research design. Very important part of your research is how do we make the research design? What do you understand by research design? Research design is a fundamental framework of how to conduct the research. I mean to say, you want to buy a house or you want to construct a house. So what are the things you are looking for? You want to know the budget, how many bedrooms, where are the directions, who is the architect, etc., etc. So while doing research, you need to have this research design. What is my resources with respect to time, money, and the amount of work I have to do in this stipulated 3 or 4 years. So you need to have a very good thing. That is one part of your research design. Second part is define your population. So what is my population? Is it country? Is it state? Is it region? Or is it only one case study, whatever, few case studies? How do you want to define your populations? Now, once I define my population, I need to estimate the right sample size. Many people don't go with this because they neglect the sample size, or in other words, they may also want to just say that I've collected this much. So maybe it may not be necessary to collect that much because of stipulated time. Most of the time, the funded researches are not available for the Indian scholars. So it's very important to know the right sample size. Third one is, I'll again want to emphasize on, if it is a qualitative data, even 30 sample size can also work. Okay. If it is quantitative, generally we take 400. So if there are errors, so you can take 500 or 600. So that kind of primary data we will be looking at. Next, coming to the third step, once you understand my sample size, how do I select the appropriate method of sampling? So there are two methods of sampling. One is probability sampling and other one is non-probability sampling. So we'll see what are the methods there. Then how do I define my scales of measurement? We'll see Likert, What do I mean by like that? It's a 5-point scale: agree, disagree, neutral. Then you have can't say, or all those things. Okay, so strongly agree, strongly disagree. So those points will be included here. So this is for qualitative data. Dichotomous. Suppose you want to just ask yes or no. You don't want to give the third option. So you can use dichotomous. Di means two, cotomous means two options. So yes or no. Then you have Thurston scale, semantic scale, and all those things. Now coming to the levels of measurement. So most of us we use nominal, ordinal, interval, and ratio. Most of you are using nominal and ordinal. Now, once you decide your levels of measurement, then why do we need these levels of measurement? When you're framing the questionnaire, so you should know how are you collecting the data. I'll tell you one instance. Once a research student has made the short project, so there was nothing to measure. What do you mean by that? He did not have income, occupation level, which has to be in the numbers. You want to do analysis on that. So everything was just yes, no kind of thing. So you need to be careful about how do I choose my dependent variables or levels of measurement. Now, what do I mean by variables? The one which varies from one point to another point, or one city to another city, or one person to another person. So what are those? Those are dependent variables. Profit from one company to the another company, or you can have the sales revenue, which is varying from one quarter to another quarter. So those are dependent variables. What are independent variables? Independent variables are your advertising cost, your marketing costs, or you can have age, gender, all the demographic variables, occupation, studies, study level, and all those things. So this is how you define your variables. There is a checklist for doing that. So you should have those checklists whether they are there in your questionnaire or not. Once this base is done properly, so we can do our research. Half of the work is done. Now, once you do all these things, then we need to go to the choose the most appropriate test statistic. So those the softwares are there, but unless you know how to choose which statistic should I use, so that analysis is of no use. Now, let's define the population. How do I define the population? The entire group of people to which the researcher has keen interest to generalize the study findings. So maybe it can be limited to, as I discussed, the country, the state. You can even choose a region. You can even choose a city for that matter, or only institution also you can choose. So that's your population. So I think there is a myth that population means it should be very big, or I don't know how to define it. So that's why you can choose anything and then fix to that. So what can I give one example of that? All who have the ID proofs is the universe of the study or population. So I'll say that India has this percentage of people who have the ID proof. Now, how do I simple? I don't have time to go through all the population. So I need to carefully choose my sample. The subset of population is a sample. So I choose in a way that those people which have the ID proofs. So I'll just go to the Aadhaar card. So I'll see the Aadhaar card numbers, and I will select few from those population which I may be interested to research. So that is a sample. Coming to the next very important thing of determining the sample size. How do I do that? If you want, you can take a pic of this formula, or you'll get it in the Google also. Or if you don't want to see this complicated formula, there are softwares to estimate your sample size from the population. Now, let us see what does it mean. To estimate our sample size, n is equal to z square. This is the standard normal value from the table. Usually this is 1.96, 2.58 or 2.33 based on how much error scope you are going to give. So 1%, 5% or 10%. So I approximated this as 2. So it's okay if you take 2. You don't have to worry about the table value. You can just take 2. So now P into 1 minus P. Let's see the population proportion who wants to drink tea and coffee. So if you say India has 60% people who wants to drink the tea. So you can have 60 and 1 minus p is 0.4. 0.4 into 0.6. So you can multiply with the 2 square and margin of error. So you can fix whether you want 3% error in your research, or you can have 5%, or you can have 10%, 7%, 4%, depending on the your interest. So again, this depends on company to company, the product to product, and so on. So margin of error usually they take 5%. Having said this, suppose there is a pharma company. For them, the margin of error for two products are different. How do I say that? For the ointment, it's an external thing that you are going to use it. So the margin of error could be 10%. It's okay. Okay. So if it is a medicine which has to be consumed at high dose, so I want to have the margin of error as 1% because I don't want to make mistakes. So they will research on the rats or animals or cockroaches and then come to this. So the margin of error is very, very critical there. So depending on that, you can choose that and you obtain from this formula the sample size. Am I clear? So otherwise, you can go to the raw software on the Google, just put up all these population values, proportion you find out from your city, how many you want to do that. For example, youth percentage is 60 to 65 youth is there. So you can put, if you're doing something on the 0.65 multiplied by this 0.35, and then Z is 2 square, and margin of error you can have 5%. So you'll automatically get the sample size. Is that fine, guys? Now let's go ahead. There are choosing the most appropriate sampling technique. So if you are doing secondary method, you don't have to do all these things. So you can take the secondary data, start working on CAs usually do that. The data is available from the reliable source. So suppose you are doing primary and you're going to interact the respondents on investments and their income level or something like that. Then we have to have the sampling technique, which is very, very important for the researchers. So what do you mean by simple random sampling? Quickly, I'll just tell all those things. So in the simple random sampling, simply I pick up without thinking much about the objective. So in that also there are two things. One is with replacement and without replacement. All your lottery systems, all those things are using this simple random sampling. For example, selecting, choosing a person for the MADA. So they can just have this MADA flats list and they pick up one chip from that and they will allot this flat to the lower income or whatever, mid income. Now the second thing, simple random sampling, where do I again apply? You can have your bank account number of 12 digits where randomly they give it and the vehicle number and all those things. So in that, with replacement and without replacement, so I cannot replace it once the account number is given to the one customer. So I'll use without replacement. So with replacement, where it is used, you can use the same pack of cards, you can use the same balls, and then those things will be coming under simple random sampling. Coming to the stratified random sampling, so what do I do there? The data is, the population is very, very heterogeneous. You have all age groups, some are studying, some are working, some are doing both, some are doing part-time, free time, whatever. So the population is very, very heterogeneous. And if you want to take 24 to 30, so other factors will also come, married, partly married, living together, whatever. So what I mean to say is, the stratified sampling makes a strata of these populations. Like I would like to have a 24 to 30 with married one group, without married, having children, with studying, without studying. So I'll make a strata, homogeneous groups where all of them fall in those meaningful stratas, and then I will choose my sample. Now, coming to the systematic sampling. So in this, the is more or less like simple random sampling with a better way why we have selected this person or this item unit. So what they do, the first one is they'll take it out in the simple random sampling. Next, subsequent units, they will have the either the multiply or the addition for that first unit. Let's take an example. Suppose I want to choose this 10 students of this 5,000 viewers. So what can I do? I can just say the person whose name is starting with A. So I'll get so many people, right? So then I want to choose another. So I'll say first A. Then I will add 5 to that. So first one is A, then A, B, C, D, E. Next, I person with having E, starting alphabet as E. Then I can start another 5. So that I can have, like that, I can have 10 samples, 10 different people who constitute my sample. So I have a systematic way why I have done. There is a logic to select these 10. Okay? So to avoid the bias. Now coming to the cluster sampling. Cluster sampling is a method where it's a mini population. You can say Mumbai as a cluster sampling, which deals with the Maharashtra also and Mumbai also. And if it is very big for you, the whole Mumbai, you can have different clusters. Western side, then you can have harbor line, and then you can have the central side. So these are three clusters where the entire population is there in that. So the last one is multi-stage sampling. What do we do there in the multi-stage sampling? So every stage we are sampling. First we do simple random sampling. In that we do static. First we take stratified, systematic cluster. So we start from the reverse. Take a cluster that is say Borivali, Kandivali, whatever one cluster. Then in that take systematic sampling, pick up some few samples there. Then you segregate and make the strata and then pick the simple random. So the stage-wise sampling is called as multi-stage sampling. So non-probability sampling is convenient sampling. So it's nothing but your simple random sampling. So conveniently, these media people choose some people on the road and ask them, is it raining? Is the cyclone affecting you? Or how is the election going? What's corona going? And all those things. So all of them use convenient sampling. So because there is no such logic behind that, why did you select that? Judgmental sampling. So the powerful people who give the opinions, maybe judges or your ICAI members or whoever, once they say that, that is final. So the judgmental sampling. So are you selecting from those people? Like if it is school, the principals and directors are the final judgment sampling they will constitute. No wall sampling. As the name indicates, it's a word of mouth reference. So what does it do? If I ask Anuj sir, can you give me one more chairman from the next branch? So he will definitely help me. So this is snowball. Then purposive sampling. I have some purpose of doing the research. So I'll select only the women folk, or I will only select the kids, or I will select only the corona patients. So these are purposive sampling. I want to do research on some purpose behind that. So now let's talk about the um, descriptive statistics. What does descriptive statistics mean to you? It describes the data. The next step is it describes the uh, how it varies from the mean. Everybody in India understands mean. On an average, 19-20 कर लो ऐसा. Okay. So average ऐसा होता है. So they will take, this is called as descriptive statistics or measures of central tendency. Central value is your average, mean, arithmetic mean. They call it with different names. Then where do I use this mean? In the stock market, they typically call you as moving averages. If the average is static, then they call it as only average. If the average is moving every day, every minute, every hour, we call it as moving average 5 days, moving average 10 days, moving average 100 days, moving average 200 days. So that is how the averages are used in the finance. So what then comes the how many measures are there? As sir already told you, and you're all aware of that. Mean, median, mode. Then we have the uh, all this describe who are used in describing the data. That is variation, standard deviation, range, quartiles. Everything comes under descriptive statistics, but those are called as measures of dispersion. So basically, mean, median, mode, and harmonic mean are called as measures of central tendency. So you know all these things, and so we'll also discuss the case studies on the coefficient of variance, range, mean, everything. So we'd like to see that. So why do we need this in the research? So once you collect the data, everybody draws the graph, bar chart, pie chart, and all the so many types of chart nowadays that are available. So Tableau is one such software which is available publicly, and you can just have a big data and then just go and just click it. So it will give you different shapes. Even the maps also it will give you. So then there are Pareto charts like 80-20 rule. So you want to show that you can use Pareto charts, you can use scatter plots, box plots, Whisker and box and Whisker plots. That is for finding out your outliers if there are any outliers in the data. So you can show them nicely. This is called as visual analytics in the latest trend. So you can use any type of charts which are available on Excel and SPSS or Tableau or any other software. So hope I'm clear with descriptive statistics. Let's see now how do I use it with the Excel. So first of all, let us have how to do the descriptive statistics using Excel. It's very simple, guys. It is one click away. So how do I do that? Go and install the MS Excel and go to the option add insert. So the steps are given here. So when you insert this, you go to the data analysis toolpath and look out for this menu. Once you do that, you will get a data analysis toolpath. In this data analysis toolpath, you just click on the descriptive statistics. I'll show you that. So once you click the descriptive statistics, everything will come in one click. Mean, median, mode, range, dispersion, and then you get coefficient of variation, skewness, kurtosis, everything. So you can use whatever you want to do. So once you put the labels in the row and output range, you will get the statistics. So how do I use this for your finance field? So I have taken up one case on this. So application of measures of central tendency and dispersion. Both together you can do it in Excel. So here I've chosen two companies, Asian Paints and Kansai Nerala. So what is this case all about? To calculate the average asset value of the top stock funds and check for any variability in the assets of these stock funds. So you CAs are very intelligent to see all this variation in the assets to understand the company's performance better. So I've taken that data from 2017 to 2021 just to indicate that this is the actual data. So how do I use this statistics for this data now? So let's take this Asian Paints and Kansai Nerolac data, and then you can just click on the descriptive statistics. You have got all these values here. What do I mean by that? Mean is 13359 for Asian Paints, and similarly for Kansai Nerolac. You got the mean. What is the standard error? The actuals and the actually expected, the difference between that is an error. Now the median is also given 13587, standard deviation 2744. So we'll see that the more the standard deviation, it is not better for the company. Lesser the standard deviation, it is more profitable. So that means how much assets they are using. Is it increase, decrease, or is there any difference in what they have actually thought and how it affected the supply chain? You can connect to that with the standard deviation. So the square of standard deviation is sample variance. Then you have kurtosis. Then you have, that is a measure of peakedness and symmetry. So we'll see them later on. So the range is highest minus lowest. So the highest value minus the lowest value. So it is subtracting from that because the minimum is 10,358, maximum is 17,582. The resultant is your range. So the count is 5 because we have 5 years. This is how we interpret for even Kansai also. Now let us see the very important application of the mean. Though it is very simple, I have chosen here small cap mutual funds, 10 small cap mutual funds which are actually doing very well for the past 3, and they have given the returns like 24.7, 25.5, so on up to 15.83. So again, I just found out the mean to understand how these funds are performing. Suppose because nowadays government has encouraged the small cap uh, to do perform better. So let us take the small cap, whether I can make more money on that or than the large cap. So I just use the mean here. Once I got the mean here, that is 23 points, 22.37, sorry. That indicates that only 3 small caps are doing very well. They are above average and rest are below the average. So what do I mean by that? Let's go to the previous slide. So 22.37 is our mean. So I'll just compare with this 24.7. I can buy this Access small cap funds. Then Kotak small cap funds is also more than the mean. SBI small cap is also more than the mean. This is less than the mean, so I will not take. Quantum small cap is more than the mean. This is less, so I avoid. Then LNT emerging business fund, I would like to go, and this I will not. So you may say that what is the use? I can just see from here only. Anyway, mutual funds are subjected to market risk. This is not the only way that you are going to use the statistics. So limitations of statistics also you have to combine with your market data, that is qualitative forecasting. So you find out other sources, how are the things working out there. So, but when I want to present it with statistics, when I want to firmly say that we are not going to do this, choose these mutual funds because there is a reason behind that. Or, in other words, so up to how much like a, so when we got the number 22.37, we know that. So then more, highest is there is no highest here because there is a repetitive highest is more. Then median. So there is a mid value how much it is. So I can have a rough idea, fair idea that which one should I choose. So I will go and buy this quantum small cap funds, Access small cap. So here there is only 10, I've just taken only 10 funds. If there are, actually there are 1677 funds. So it's very difficult to analyze without doing the mean median mode. So put all the 1677 funds, small cap funds, and use your mean median mode. And here the median is also 22.37. So very good data we got where mean equal to median. So now I can say what is my range of returns. So I will take highest minus lowest. So highest was, if you see, 31.83 and lowest was 14.76. So the range I am going to get is 17.7 is the returns they got for the selected small cap funds. All these studies, they will do it in US where the CA do this research and they have the logic to present to the customers why and how these measures are used to get the customers convinced. Hope I am loud and clear.
Yes, ma'am.
Now, thank you, ma'am. So now let us see the application of quartiles to measure consistency of funds performance over the quarters. This I found very interesting. So you may, most of the fund managers want to switch their funds in the from first quarter to second quarter because different sectors perform differently in a different way. So quartiles come very handy when you want to analyze these mutual funds or stocks or the companies. So investors use quartile rankings along with other various performance parameters. So why I said along with various performance factors, parameters, because so the past performance does not indicate the future performance. All of us know that. So that's why you need to analyze based on the rolling returns, market phase performance, etc., the global cues and all these things. So now, how do I do that? Mutual funds with the lowest percent returns in the chosen time period are taken as bottom quartile. So then the one which I've given, the highest returns are assigned to top quartile. So they now segregate the quartiles, top, which are the mutual funds which are actually performed in the first quartile and second quartile. Some have performed in the second quartile, some have performed in the third quartile. So with this past data, they can analyze as most of the experts say that the history repeats. So one of the way that we can look out is using these quartiles. So the quartiles, first quartile is said covers 25% of your data, and it is n plus 1 upon fourth term. So I'll apply this for a case study and show you in my next slides. So what is n? The number of observations, the return they are given plus 1 upon 4 will be giving you the first quarter. Second quarter will be giving having the 50, covering the 50% of the data, and it's the midterm value. It's also called your median. Third quarter is 75% of your data. So 3 into n plus 1, 3 by 4 gives you 75%. So the n plus 1 by 4, 2 and 4 are respectively, the formula is matching with the first quarter, second quarter and the third quarter. Now let us see one application and actually how do they do that. Following are the 3-year annualized returns of the mutual funds. 14.6, 15.87. Again, I've taken the same example where I showed you only the mean median. Now the quartiles are very, very interesting. One, they talk about the measure of dispersion or variation. So I earlier defined the statistics subject as measurement of variation. So if you only see as a common man only the mean, so you'll not get much idea. Okay. So when I use the measure of dispersion to the measure of central tendency, my understanding will be much better about that particular performance of that particular fund. So quarter one is, as we see in the formula, n plus 1 upon 4th term, where n is the number of observations. So I had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 values. So 10 plus 1 upon 11, 10 plus 1 upon 4, that is 11 upon 4th term. So how much comes to 11 upon 4th term? So the 4 into 2, 8, it approximately comes to the third term, or 2 point something. So in order to make it simple, I've taken the third term. So that is why 18 is the first quarter returns they are given. Now coming to the second quarter, so n plus 1 upon 2. So my n is again 10, 11 upon 2. So here we have 10 values. So I can't just take the mid value. So I have to have the mean of the 2 mid values. So I've taken the mean of the 2 mid values as 19.32 and 20.08. So this gives my second quarter performance of that particular fund. Now coming to the third quarter is 3n plus 1 upon 4. So 3 into 11, 33 upon 4, approximately 8. Okay. So I'll take the 8 term, 2, 3, 4, 5, 6, 7, 8. So this is 24, approximately 24% you are going to get. Now what do you mean by first quarter I am getting 18, second quarter I am getting X value, third quarter I am getting 24. So you can see the fund managers can see this is usually given better in the third quarter. So I will not invest in the first 6 months in this fund. So I will switch at the third quarter. So what is interquartile range? So if I subtract worst come worst, how much returns I am going to get? So third quarter minus the first quarter. So 24 minus 18 is 6. So the interquartile range in the 3-year annualized returns is given as 6%. So this was very, very interesting case where you can apply the quartiles to the mutual fund and you can logically conclude how do I select the funds and why do I shift from one quarter to another quarter based on the market performance. So with this, we will go to the another measure of dispersion. Hope all of you know that it's coefficient of variation. So how do I use the coefficient of variance? We have a very interesting case for you. So Rahul, after gaining a huge rewards and losses from a high risk investment, he now decides to go for a safer investment with stable and more promising returns. He chose 3 options. First one, a stock investment. Rahul's colleague suggests stock Tata Motors based on his previous track of investment. It has proven to be favorable with good financial performance over the last 3 years and has a volatility of 3.63% and an expected rate of return at 15.6%. Then the second one is bond investment. A financial advisor advises Rahul on a PSU bond With a substantial good rating, it has volatility of 5% and an expected rate of return as 4%. And the third option, exchange traded fund. So Rahul's friend is working in NNC, suggested an LNT emerging business fund offering a volatility of 8% and expected return of 16%. If I don't do coefficient of variation, I will go with this fund, or I will go with this. If I want 15.6, I will go with this because it's a less volatility. So I'm confused, or should I have all the three to see how they perform? So the Rahul wants to know the analysis. Which one should I do? Do I go with my friend who is working in NSE? He has suggested. Should I go with the PSU bond? Now they are doing well. Or should I go with the Tata Motors? They are doing well. So what do I do? So now let us use the Rahul uses coefficient of variation for all the three options. So how do I define the coefficient of variation? Coefficient of variation is standard deviation divided by mean into 100. So it's not mean upon standard deviation, it is standard deviation upon mean. So the importance of having these two together. Why? Mean is the very popular measure of central tendency. Standard deviation or variance is the popular measure of dispersion. So we are using both the parameters here to find out the coefficient of variation. Let me tell you, the lesser the variation, better is the stock. So this fundamental is also used in the calculation of beta. So if sometimes we can talk about beta or on the personal ID also, how it is calculated. If people are all using Sharpe's models and all these things. Okay. So in this case, now we calculate for the first one. 3.63 was the volatility and expected rate of return average. Rate of return was average 15.6 multiplied by 100% because it is expressed in percentage. So the first stock investment gave him the option of 23%. Similarly, he went on calculating for this bond investment. So Rahul inputs his volatility percentage and the return percentage of 4 to 5 by 4 into 100%. So this came out to be 12.5%. So now exchange traded fund. I told you this was looking very attractive there, 16% rate of interest, 8% volatility. So when I calculated coefficient of variation as 8 upon 16 into 100%, I got 50%. So I said lesser the variation, better is the risk and reward ratio. So which one would you like to select? So the bond investment was very, very safer. With all three options weighed, the bond investment shows the lowest coefficient of variation and at the highest expected rate of return out of all the three options. With such a favorable risk to reward ratio, Rahul decides to go for the bond investment. Hope you like the application of coefficient of variation. So you can also use for in the cricket, they will use it for analyzing who is better, Rahul Dravid or Sachin Tendulkar. They will take 10 matches they have played and they use the same mean and the standard deviation and then calculate who varies less or who varies more. So also I would like to quote here Amitabh Bachchan in one of his Diwar friend, he said, "Mere paas maa hai." So the richest person you'll never know, they might go into the jail, and the very steady people who are earning less, and the mother is very comfortable there. So the lesser the variation, why I told this is very easy to remember. Though it looks high here, the lesser the variation, better is the performance. Okay. So with this, I will summarize how do I use the applications of descriptive statistics for business research. So, what is research, guys? Answering a specific question is research. So what is that varies then? So there is a variation in the people, variation in the process, variation in the technology. So if I want to reduce the variation, I need to integrate the people with the process and the technology. So measuring the business process, we use variance. Even you can measure the people's difference of opinions or difference in working styles, difference in working number of hours. So you can use it to anything. So or difference in using the technologies for their businesses. Okay. So So all these things you can measure with the help of variance. So that's why statistics is very, very powerful to the businesses. This is the most important application of, if you know mean and variance, half of your statistics is done. Second, your accounting uses statistical methods to select sample for auditing purposes and to understand the cost drivers in the cost accounting. How do I do that? So acceptance sampling is one of the important methods. So when you go to the audit, what you do, you just draw a few samples and want to study. Based on that, you say, oh, okay, this is done. Or you may say, you might want to further improve on this. So if 2 out of 10, the normal procedure is, if it is greater than 2 out of 10, then you say that you repeat the whole process. If it is less than 2 upon 10, you say, okay, chalta hai 19-20, we can adjust that. So this is how the acceptance sampling is used. So in the manufacturing industry, for example, the Coca-Cola, every day millions of bottles are produced with millions of volumes. So it's very difficult to assess the process there. So what they do, in the first batch, they'll pick up 2 bottles. In the last batch, they'll pick up 2 bottles. During lunch hour and after the lunch hour, they'll pick up 2 bottles. So they will just find out if everything is fine with that, the quantity they have done, the quality and the work. So based on this decision, they will accept the whole population. So this is a very, very important concept where we use acceptance sampling. Coming next to the finance field, how do I use statistics? These are few things I've just shown you how to use statistics in finance. This uses statistical methods to choose between alternative portfolio investment and to track trends in financial measures over time management. So this can be used, statistics can be used to measure the quality of products. How do you say that statistics can be used to improve the quality of products or the services delivered by the audience? Suppose you see that one I've already shared how moving averages are used in the stock market. How do I check now the quality of the product? So whenever we do, usually the companies do the quality inspection at the end of the uh, uh, process. Okay, so there are quality circle or quality team will be there who will assess the products and say will reject. So my master, he taught me we can check the quality for single piece every time when you produce based on the type of the product. If there is any defect in that quality, you stop there. Now, how do I use statistics to that? You unless until you measure something, you cannot improve. So you see what was the expected limits given to that upper control limit or lower control limit for that product. Say for example, a pen. So in this, there is some diameter that is there. So you have to have the diameter upper control and lower control limit fixed for that. So you are going to use this particular method of variation and then the quality automatically will improve. So it's not like chalta hai. So the quality first or that should be the first priority that can be achieved only by measuring through the statistics. So they use mean or variance to see the upper control limit and the lower control limit and control this limit so that the errors will not multiply because by checking the quality of the product, the process will not improve. So this is for operations and finance. I club both together how statistics can be used. Coming next to the marketing field, this uses statistical methods to estimate the proportion of customers or when they buy one product over another and why. And they want to draw conclusion about the advertising strategy. It might be most useful in increasing sales. So some products are without advertisement they buy, and some products with advertise they are looking for advertisement. I think it's ad देखा ही नहीं. I've not heard about this company. I've not heard about this. So is it worth spending on marketing? So the key test which can be used is before and after. So before the advertisement or before the marketing campaign, you can see what was your budget, and after you spend, really whether the sales increase. So you can use their why portion of this and how much you have spent on that. Is it really necessary? So you can use before and after product test. Now, one very important thing who are collecting the primary data, they need to test the reliability. So testing reliability can be done by using Cronbach alpha. So Cronbach alpha used to test the reliability of the data, which means to test the internal consistency of primary data collected. So how do we do that? We can do it by SPSS as I'm showing it here. But prior to that, I just want to share with you. Suppose if I ask a vague question in the questionnaire, how much is your salary? So everybody puts values like 50,000, 1 lakh, 75,000. And some are confused whether she's asking gross salary or net salary or after tax, before tax. So many questions will be there. So I need to be very clear and I need to check the internal consistency, how he has done this. Why did he pick this question? So I mean to say, what is your salary? Instead of asking this question, I will ask what was your tax paid last year, last financial year. So I will know approximately what is his salary. So these are the things where you can connect the two questions, like what is your salary and what is the tax paid. So you'll come to know that, and any other sources of investment. So you will come to know that whether these questions need to be tested for reliability. So I'll choose those two questions, or you can choose four questions which are interrelated. So, for example, in marketing, when you buy the product, there are several reasons why you purchase that product: cost, price, then you can have the comfort, color, then you got on EMI basis. Yeah, administration procedures are very simple. So I can have all these questions and try using the reliability test. So the test uses Cronbach alpha. This can be obtained by using IBM SPSS. Here I've shown you the SPSS screenshot. It's very simple there. You can go to the Analyze menu and click on the Scale and Reliability. You can select your two questions like salary and the tax paid, or you can select the any two questions: why did you buy the product, cost and quality of a product, okay, or any other questions you can have. So to measure the internal consistency of the data, if it returns the Cronbach alpha value as 0.7, I say that this is a good primary data you're collecting. If it is less than the zero point 0.7, then your reliability is questionable. And many people don't do this. So they will find a problem in doing their research because they do all the analysis, and if the data is not found to be reliable, they have to redo the whole thing. So ideally, I will suggest how to do that. Just collect 50 respondents and go for a pilot test. So take that pilot test, do all the analysis on those 50 respondents. You will come to know that whether you whatever results you wanted, are you getting it or not. If not, change the questionnaire and see what mistakes you have made there. How did I ask this question? How did they respond that? So for all those things, I have to check the internal consistency of the data. Now, very, very important concept we're talking today is about danger of mixing up of causation with correlation. Okay? Since it is a webinar, we are not doing hands-on. Otherwise, usually I would love to do hands-on on Excel, all these case studies. Right? So in that sense, I said the time is less. Okay. So let's see what is causation and what is correlation. So statistics, people think that it is very easy. Then they go to the Excel, just click on those two data samples and do the correlation, which is not. Why? Because correlation is a statistical measure that describes the strength and direction of the relationship between two or more variables. However, it does not mean that change in variable is the cause of change in the value of the other variable. So what do I mean that? For example, increase in the number of hours worked by an employee will increase his income. So this could be a correlation example. Then what happens to the causation? Causation is commonly referred as cause and effect. That means the cause of one event is the reason or the cause for the occurrence of the other event. So let's see some more examples of that. Many people, if there is a causation, they will think that there is a correlation and they go on analyzing that. Now, examples of causation and correlation, you can just identify whether there is a cause or whether there is an actual correlation. Is there a relationship between women's education level and their health? So, if you want to test this, you can put the education level and their health parameters and you can do the correlation. Does the company's marketing campaign increase their product sales? So we need to find out is the real cause is the marketing campaign or they just the demand there was a demand for that product and sales happened. Smoking causes the lung cancer. This is a very dangerous question. So without smoking also, you are seeing that a lot of people are dying with the lung cancer because they pick up the chemicals from the food, the water and all these things. So I don't know whether it's a causation or correlation. If it is confusing, then how do we do this, madam? I'll come to that. Does the short-term trader picks up the trades based on volumes? Such questions are often confusing while drawing results in your analysis. So if there is so much of confusion, so how do I segregate causation and correlation? Researchers need to investigate whether a correlation exists between the two variables. If there is a correlation, then this may guide further research into investing which action causes the other. So this can happen only by understanding correlation and causation. So let's take an example of smoking is the cause of cancer. To sort out this, I just told you there are a lot of reasons for having cancer. So the people who are not smoking and people who are smoking, make two groups of that. So let's see that. Now we will divide the sample into two groups, one which do not smoke and the other one with the smoking. So we make two groups and then by making these two groups, the first thing is you're eliminating causation. So the researcher need to adopt two methods here. He has to have the controlled study of the sample or population, which is split into two, with both of them being comparable in almost every way. Don't choose the respondents who are in the phase of death and they say that without smoking he has died or with smoking, or sometimes he smoked or something like that. Try to identify the respondents or both the groups. Within the group, there should not be much variation. If they are not smoking, means strictly not smoking. Or if you're finding out any other reason with that, they have healthy lifestyle, walking, swimming, days to do everything, still they got the cancer. So that could be one group. And second one is purely smoking, less smoking, once in a while smoking or not smoking heavily. So in these two groups, they receive the different type of treatment and the outcomes of each group are assessed. This method is most popular in the statistical science. So once you know that this is the reason, then go on for the correlation. So now we'll see the correlation is a statistical technique to measure, or it is denoted by R, whether there is a relationship between two or more variables. We have seen this in the last slide. So correlation actually measures whether the two variables are going in hand or in the same direction or opposite direction. So how do we measure the correlation? Simply you can use the scatter plots by Excel or you can use the Tableau for doing the scatter plots. Or which is the first method to study whether there is relationship or not. Now how do I interpret these scatter plots? So let's input the Asian Paints data, X as year and Y as earning per year. So let's see, select the data. Wait a minute, I'll just open the link.
Go to the folder and open.
Okay, the file is just opening.
Are they able to see?
Are you able to see that Excel file?
Yes, ma'am.
Yes, ma'am.
Yeah, thank you.
Yes, ma'am.
We have a year here 2014, 15, 16, 17, 18, and till 20. We have earning per share here 1 minus 13, 5 minus 3, 3 and 2 and minus 1. So you go to the insert and then you can have the recommended charts and you can show that the scatter plots here. So you can just click on that, you'll get the chart automatically. Okay, so I'll select the data here first and then do that. So insert recommended charts and the charts. Okay, so we got the charts here. So these are the years, and those have got negative EPS, which are shown here, and those have got the positive ones, they are upside about 0. So what do we understand by this? If you see that the points are scattered in a way, so there is no correlation between the as the year is increasing, the earning per share is not increasing. We can't do any decision here. So this is how I use the scatter plot. And if you want to really know the correlation between these two, so you can go to the insert and then you see that there is a data here. In the data analysis, I was talking about the mean, median, mode. I'll show you all the parameters here. So you go to the correlation here. Okay. So I can just select this input range, whether there is a correlation between these two factors. I'll say okay here. So I got the correlation as 0.31. So when I saw that visual thing, I saw that data, the points are scattered. When I calculate the correlation, I got very low. 0.3 is a very low correlation. We are not able to make the decision whether we should strongly say that the both are as the number of years increases, the earning per share is not increasing. If I get the value as 0.7 or more than 0.7, I am pretty sure then I can declare that there is, as the number of years are increasing, the earning per share is increasing. So this is how you use that. Now I was talking about the data analysis toolpath. So here you go to the descriptive statistics, and suppose you want to know the descriptive statistics of this. Sorry, one sec. Let's go and see the. You want to see the descriptive statistics of dividend payout. I'll just select this, and then I can say okay. So I can get the. So this is the Asian pain data, and I'll see descriptive statistics. So I'll select this. So I'll go to the data analysis. I just want to see the average of that. So I'll select that. Okay. I'll just select this. I'll just say okay. So I need to select the summary statistics here. Okay. So see here, it's one click. I got mean 18 earning per share. The standard error is 1.9. Standard deviation is 5.2. Then you have minimum as 12, maximum as 27. The range is 27 minus 12 is 15. So the count is 7 years. So like that you calculate all. So in this data analysis toolpath, you get all the statistical tools for your application. So even you have t-test, we were talking about that. You have regression, everything is available here. So this is how you do it. Now, let's go to the next. Okay. So scatter plot for Asian paint, I've shown you just now how to input the data. I say X as EPS and Y as earning per share, and we looked at the scatter plot and we also analyzed. We got R as 0.3, and how do we say that the correlation is better? If all the points join to form a straight line, then we say in that case R will be 0.7 or more than 0.7. So I say that there is a good correlation. So similarly, I can get negative values also. If I get R as minus 0.5, means what? One variable is increasing, other is decreasing. It's so simple to do that. So this is the Asian paints scatter plot. See, every year it is increasing. It's forming a pure straight line. For showing you the EPS, I just put the values of the other company was minus 13.5 and also on. But Asian Paints, you can see I can just draw a line here. If you could see that. This is a very good correlation as the year increases. This is the time on the x-axis, y-axis we have EPS. So it clearly indicates that there is a strong correlation as the year increases, that earning per share is increasing. So when you have huge data, it's very easy to do that, and you can show it to the management that there is a logic behind why I'm suggesting that. So statistics always helps you to prove your thing with the numbers. Okay. Very important thing is nominal data. What is nominal data and how do I analyze that in a research? So nominal data, as I've already mentioned, there could be accounting number, then account number, there could be a car number or whatever. This is it's a number which is used for representing visually, and this does not mean that roll number 1 is rank number 1. Okay. So this nominal data can be analyzed by using the grouping method of variables. So where do I use in research? So I can use this research in wherever you are saying yes, no, or wherever you are saying some number which has to be assigned to that particular data. So let's have this. So what is inferential statistics? We were discussing about the second type of statistics. The time is less, I'm just rushing. So there is a population, and if I draw some inference for the population, how do I do that? I draw a sample from the population, and this population sample, is a representative of the population. And then I make an inference on this sample that holds good for the population. For example, if I take 5 students who are really doing well, then out of the 50 is my population. I can make an inference that this college is good or this school is good, whatever. Okay. So now the testing of hypothesis in inference is a very, very important thing. How do I connect my research to this categorical data? What is categorical data? As we said, there is a Likert scale there. Agree, strongly agree, neutral, disagree, strongly disagree. So the point of scale is 5.4. First thing in inference statistic is you have to make the testing of hypothesis. What is testing of hypothesis? So you have to assume certain things and see whether it is true or false. So assumption is called as hypothesis. First thing is set up a null hypothesis. So though you are very sure that you are going to fail, still you want to give the exam thinking that I might pass. So what I mean by that is you have to say that though there is a difference or though the result is opposite, but still you need to be positive and say that you set up the hypothesis in a way that it is not significant difference. Why is it so? Because technically the statistical formulas or tools will not work if the null hypothesis is saying that it is not true. So universally it should be true. That is the first fundamental. So or otherwise this institute can question you if you know that it is not going to work. Why did you spend so much time and money and resources on doing the research on that? So let's see that there is no significant difference between actual and perceived. So we say that though we know that there could be a difference between actual and perceived, but we'll say that still there is no significant difference. 19-20 हो सकता है, बहुत ज़्यादा difference नहीं है. That's why we say. Okay. Now how do I make this table? From the research data, I will collect all my answers which are ordinal in nature. Ordinal means what? Agree, disagree, neutral, and I bring that ordinal into number, nominal. 123. So 123 people said, I am not going to agree, or I am going to agree. Sorry. 72 people want to strongly agree. 223 are neutral. So in a research, guys, if you don't want to give in a question neutral option, you can technically and logically remove the neutral option, but you have to have a solid backup why you are remove the neutral. For corporates and all those things, they will remove this. It is allowed because you see that the entire data is scattered in the midway. You have lost so much of sample here. If we don't give this option, people will tend to either come to the agree disagree or they'll go to the strongly agree or agree. Okay, so collect all your answers which are ordinal in nature, meaning you have they have responded as agree, disagree, neutral, and strongly agree. Then form a contingency table as shown in the below. So I made a table out of collecting all the responses one single table. Now I'll use the chi-square test of goodness fit. Why? Because chi-square test of goodness of fit tells me, is there a difference between actual and perceived things? So, for example, would you like to buy ITC stock right now? So people may say that they perceive that they might want to buy it, but actually did they buy it? You want to see the difference between. So I want to see the test of goodness of fit. So I'm using this expected frequency or observed frequency. Observed is you actually happened theoretically, and actually is actually bought the share. Perceived is observed. So I check the difference between that observed minus expected square and the expected. This follows chi-square test, and I will say that I'll calculate the expected value of this and compare with the table value. And if my expected value and the observed value is not varying too much, I say that I'm accepting my null hypothesis, or I'll say that I'll reject my null hypothesis. Means what? Many of them who have perceived and actually purchased, there is not significant difference. Then I say that, okay, more or less everybody purchased. But here you see that most of the data is lost. So we have to only concentrate on these things, and you may have to reject the data. So if you don't want to do this procedure manually, you can use this on SPSS chi-square test is available. Understand it is used for goodness of fit. What do I have? I should have ordinal data, and I am able to make this kind of contingency table. That's it. It will give the final result you can accept or reject. So if you see that chi-square is sum of O minus E square upon E square. This is nothing but the formula of variance. Again, I told you statistics study of variation. So variance is used to do that. Only thing is the data they have expressed is in ordinal, and the name of that is becomes chi-square because it is used for goodness of it. Now the last portion of this is the regression. Very interesting application of statistics is regression. Regression is a statistical technique applied for assessing the strength of relationship between two or more variables. The first condition is you should have at least one dependent variable, and you can have as many independent variables as possible. Because of time paucity, I'll take only simple linear regression with only single independent variable. So example, forecasting sales revenue or expenses of patient claims. So let's define the simple linear regression equation like y is equal to a plus b into x plus b. What is x here? X is dependent variable. It can be your sales revenue, it can be your profit, which is dependent on many things. What is independent variable? Independent variable could be your advertising cost, it could be your age, it could be your occupation level, it could be your gender, income, so many things. So now what is A here? A is your intercept and B is your slope. So these are the two constants we need to eliminate, and we will get this regression equation more. So what is E here? E is the error. So I would like to mention here, the forecasting cannot be 100% true. So there could be an error. Again, there is a difference between forecasted and the actual. So the lesser the error, the equation becomes more, the model becomes more fit. So more the error, the model is not good, fit. Okay. So hope I'm clear with this. Let's go to the next. How do I do regression in one click? So install the data analysis tool pack as I told earlier. Look out for the data analysis tool pack under main menu. So in the main Excel sheet, you got the data analysis tool pack, which you already seen. I've showed you in the scatter plot and the correlation. So you got this again. So in this, look out for regression. So now let us use the Asian Paints data and predict for 2020. So I have not taken 2021 because to show that how close we are, because 2020 results are already here. So for that matter, I have selected prediction for 2020, though we are in 2021. Select the Y range, which is your dependent variable, and select the X range. Let's see how to do that in the Excel. Check the labels, click in the output range box and select the cell. check for the residuals. Now let us take this data. I've taken this data of Asian Paints from the period 2014 to 2020. So, and also I've got the earning per share. So let's click on this. Can you see my screen here? The Excel sheet, can you see, sir? Could you see the Excel sheet, sir?
Yes. Yeah.
So I've taken the real-time data of Asian Paints starting from 2012 to 2020. So then I've selected from this the earning per share, and you can select anything which is dependent. You can select profit before interest, or you can select profit per share, or revenue from operation, dividend per share, cash earning per share, anything you can select. Okay. So for illustration, I've selected the earning per share and the year. So this is what I've shared here. So this is the year, and I've marked this as red purposely because I want to show this. How do I predict this? Now I'll show that. For convenience, what I've made is I've called this year as 2014 as 1, 2015 as 2. Well, you can use the same thing, but for easy, for the purpose of calculations, I've made 1, 2, 3, 4, 5, 6. So let's see that on the next sheet. Okay. So I'll just pick up this earning per share up to 6 years, and I will do it in front of you and show that. So here we are. Then we are on the data analysis toolpad as discussed. Just going a little faster because the time is okay. So I'll click on regression. Then I got this input range and y range and x. What is x, guys? X is a dependent variable. My earning per share is dependent on the year. So I'll take the year as 1, 2, 3, 4, 5, 6 only because 7 I want to see what they have got. Now let us take the from 8 I've taken, right? So I'll put the labels also and I will say okay. Okay, that's right. We got this output. So regression is 99. I told you the regression, if it is more than 0.7 or 0.8, 0.9, superb correlation. There is a perfect correlation. That means every year the EPS is increasing as per the numbers of the balance sheet. So R square is 0.98. Again, this is a better measure. More than 0.7 is enough for us. Now, how do I construct the equation? Let's come to the y. Y is equal to, these are very important for us, minus 4.67 and plus 0.49. So if I can have these in a red color, so it can be visible for you. So I'm taking these values here, 4.6 plus 0.49. What do we mean by that? Okay, so you got it here. I will go to the slide and show you. Okay, so the next one, this is the input I have got here. So, okay. So this is the multiple 0.99, the same thing which I showed you. I have put it in the slide. So I have to have correlation which should be greater than 0.7. We got the fantastic thing. Then we have got these values, same values here. The intercept and the year we got. So I'm now using for interpretation. Y is equal to a plus bx. So for the year x is equal to 2017, I'll take x is equal to 7. So I put the value 9.66 plus 2 into 0.7. So I got 23.66 as predicted EPS for 2020. So, but what was the actual? You have seen that actual in the result. Actual was 27. So let us calculate the lower side of EPS using the lower limits from the above table. Where did I get the lower limit of the above table? I'll show you in the last slide. So lower limit was 8. If you see that 1.6 was there here for the year, and intercept was 8.17. Upper limit was 8.27. Okay. I put those values, how much I can go downside. Let us calculate the lower side of that. 9.66 plus 2, instead of 2, I can go up to 1.67. That is B value. This is A value. This is constant. B is your slope into 7. So I got 20.93 as the earning per share. If I get higher one, if the company does very well, so upper side, how much I can go? So same equation, 9.1166 plus 2, instead of into 7, I'll take the higher value, upper limit value, that is 2.33. Instead of 2, it is going to 2.383. This is again the slope, okay? And this is again the A, the constant. So earning per share, you got upper side, you'll get 29. It is so close, guys. It is 27. Actual EPS is 27 for Asian Times. We are so close. We are either getting 23 according to the estimation, or we may get lower side 20, higher side we get 29. So this is in the range. So any questions? With this, I can say that I've done a bit of justice showing you the regression, correlation, everything.
Yeah, thank you, Kavita ji. Thank you very much for your nice deliveration. You can stop screen sharing, please.
Yes.
So thank you very much, Dr. Kavita ji. Over to Dr. Mitagwal.
Thank you, Chairman, sir. It was a wonderful session, and that too on statistical side and how to analyze the data. And this is really very important session. And we are behind the schedule, so I would request Chairman, sir, for taking up the session, question answers, please.
Yeah. So thank you, Dr. Amit Agarwal ji. Ashish Agarwal ji, our past chairman of Jabalpur, is very well there, and Manish ji is there. Manish Kausal ji, our past chairman, and Madhu Agarwal ji is also there, I think. So all the members from Jabalpur are also there, chairperson of the Jabalpur branch. So we are having certain queries. Quickly, I am taking from each and every part of the country. We are having the query from Hyderabad. D. Jitendra Rao, SD variance, regression, sigma, volatility. Kindly explain the relationship between the above terms. Should I repeat?
Yes, sir.
Yeah, SD variance, regression, sigma, volatility. Kindly explain the relationship between the above terms.
Standard deviation is difference between the actual and the expected. Okay. Volatility again differs how much you are varying from one variable to the other within the variance and between the values. Okay. Then coming to the regression. Regression is a predicting or estimating tool. Okay. So your variation will tell you how much you are varying from the actual to the observed. So this is the relationship. All are related to each other. More the variation, volatility, more is the variation. Less is
yeah. Then Mr. Varghese from Thrissur, new tools in statistical research.
These are the basic tools. New tools are multivariate analysis. You can use factor analysis, cluster analysis, conjoint analysis, discriminant analysis, and so on and so forth.
Yeah. Amol Joglekar ji from Bengaluru, what I understand is in the first step, one needs to identify, decide the distribution, for example, normal, binomial, Poisson, beta, etc. And then one can perform the F test, chi-square test, Z test, etc. or mean, mode, median, skewness, kurtosis, dispersion, etc. Right? So please, can you throw some light on how to decide, identify the distribution of data?
Yeah. So normal distribution basically is your sample standard deviation and the population deviation should be as less as possible. So how do we do that? Assume that it is normal distribution. You first find out the outliers, remove the outliers, and make the data which is compatible, and apply the normal distributions. Once the data is normal, then you start using all the chi-square. Very good question.
Yeah, thank you. Then CA Dharam Singh Rathore ji from Surat. Ma'am, can you please give some details of nominal, ordinal data with example? I think already covered, no? Yeah, then from Gurugram, R. Ravichandran, he is asking, we can use G power, madam. It gives result with type 1 and 2 also for sample determination level.
Yeah. So you can use, based on your level of significance, your power of the test depends on your level of significance. So if it is 1%, your chances or error are very less. If you rightly identified that. If your power of confidence or the error is more, then your data is not that valid.
Yeah. Then CA Madhavanji from Chennai, under what circumstances we can use arithmetical progression and geometrical progression as a tool for scientific research?
Yeah. So geometrical progression is for exponential thing, where we can take the square root of that and nth root of that, where their data is exponentially. For example, one stock is say 15, another is 1550. People think that the smaller stock will give you more returns. It may give you more volumes and more profit, but at the same time, the variation in the percentage is same. So you can have a MRF stock with 50,000 or 60,000, or you can have 15 rupee stock with 10,000 stocks, but it gives the same result.
Yeah. Thank you. Then CA Ridhima Agarwalji from Ludhiana, can we have a specific class arranged to use these statistical tools hand-on? So we'll try to have a specific session for that. Amitji, yeah.
Yeah, Chairman sir, for the knowledge of the viewers and respected members, we had one training program, 5-day training program on how to use statistical tools, this SPSS and other things. We recently had that. We are having very shortly. We are having. We have planned it in the month of June. One advanced course also, and time and again, let this situation came over. We will have some physical program at our both the COEs on research methodology. 3 days, 4 days program we will be having shortly.
Yes, yes. Yeah. Thank you, Dr. Amitji. Then from Kochi, Subramania Iyer ji is asking, kindly explain selection of audit sampling with data.
Okay. So I just shared the case, Coca-Cola case, like they had the data of 1.5 billion bottles per day. So they randomly picked up 200 bottles in different specified intervals, and they tested this, whether the acceptance sampling, whether out of these 200 samples, all of the bottles are refilled properly or not. And there was one data where they had a small pin going on in the bottle. Actually, what happened? So they wanted to throw all the bottles, or they wanted to see up to what time the pin has not gone into that, because it's a very legal thing. If the pin goes into the stomach of the customer, so they would have lost the whole battle. So what they did is they decided that it happened after the lunch. So after the lunch, the entire bottle was just discarded. So this kind of audit, you can do it with the data points. So they took the data points, and thank you so much.
Yeah. Then CA Gulshan Baig from Dalkhula, please explain the relevance of Cronbach alpha, how it is calculated and why.
Okay. Cronbach alpha is to measure the internal consistency of the data. You can take 3-4 variables and you see how and why the people have chosen those respondents. So the interviewer will ask you, how do you say that your data is valid? So when this Cronbach alpha, you can do it on Excel also, SPSS also. So if you can mail me, I will send you the formula. So in the SPSS, I show you there is an analyze menu. Go to the scale, click on the reliability, and select those questions. Automatically, it will give the value.
Yeah, thank you. And CA Tarun Khandelia ji, my very good friend from Chunjuru, is appreciating the efforts and deliberation. And CA Ridhima Agarwal ji from Ludhiana is requesting for the PPT. I think we'll request to Dr. Kavita ji so that we can disseminate the PPT amongst the chartered accountants. We are having around 5,000 chartered accountants from each and every part of the world who are the part of this program. Then Ajay Ratilal Pandey ji, from Ahmedabad. He is also appreciating the session and is telling that it will be very, very useful. Then Ravi Chandranji is also appreciative. Then from Chennai, and my good friend Niti Tandonji Lucknow, she is also appreciating. CA RP Suklaji from Prayagraj, Allahabad, a very senior member from there. Thanks to all the professors as well as the organizing committee for such a nice chain of knowledge. Thank you. Then from Chennai, one query is there. M.R. Ramchandran, how does the concept of decision tree be useful as one of the tools and techniques for the research?
Okay. Decision tree comes under classification problem. So you want to see whether should I have a vote to the one party or not vote to the one party. So it is basically used to understand the probability of your decision. So the actual data is used by this Schlumberger, that is a company, to drill a oil well. So they want to drill a oil well. They want to take a risk or probability whether they will get the oil at what depth. So they will say, so there is 70% chance that I may get the oil, or there is 30% chance that I may not get oil. Then again they will drill further if they don't get at 0.70. For such decisions, they will use decision rule. It is for basically for classification of that using the probabilities.
Yeah, thank you. Then CA Kailash Chand Gupta ji, my good friend from Noida, and CA Amit Pastor ji from Datia are also appreciating the event. Then Dharmesh Mavni ji from Surat. What are the independent and dependent variable in the research topic of pre-pack insolvency in IBC?
Okay. So, what if you can tell me the variables, I'll segregate and give you what are independent and what are dependent.
I think it is basically related to insolvency and bankruptcy code. So we'll respond separately. Then from Bhopal, ma'am, can you please explain the 6 sigma event and its frequency? Neha Janji from Bhopal.
6 sigma is again based on the concept of defects per 1 million opportunity. We call it as DPMO. So it is based on the concept of variance. So variance is what again actual minus the expected. So if you consider the 6 sigma dabba walas, how they are able to perform that in Mumbai. So what they will do is they will just listen to their leaders and follow the process. They will not apply their mind. So the errors are very less because they apply the 6 sigma, that is actual minus the observed. So their whatever process has been given to them, they will just follow that. They will not use their minds like the intelligent ones. So अन्ना ने बोला हो गया, अन्ना जो बोला है वही करने का.
Thank you. Then C. Aditya Kumar Kesri ji from Devgar is also appreciating the events. Then Sanjay Agrawal ji, Bandar East. The topic of the seminar was very good. The speaker has also explained everything very nicely. Then from Masuri, Jagdish Singh Sani ji is also appreciating. And then Mumbai, can we have the link for downloading the PPT? C. Chandrasekhar ji is asking. So as we are having a lot number of other queries also, we'll respond the queries separately. As lot number of viewers are there from each and every part of the world. Thank you, Dr. Kavita ji, for very nice deliberation. And thank you, team Jabalpur, the chairperson, CA Madhu Agrawal ma'am, and our honorable past chairman, CA Ashish Agrawal ji, CA Manish Kausal ji, and all our honorable delegates from each and every part of the world. Over to Dr. Amit Agrawal.
Yeah, thank you, Chairman sir, for giving us opportunity to organize this very, very useful event. And more than 5,000 delegates attended, and it shows the query shows the interest of our member and how this very, very lengthy topic covered in 2 hours. It shows the efficiency of Dr. Kavita. And with these words, with your permission, if you permit, can I share the International Research Award brochure over here so that delegates can, if they're so interested, they can nominate themselves or get them nominated. So Amit ji, can you share? Yeah. Thank you. So this is the International Research Award 2020-21. Last year we had this award in 2020, and IFAC President Dr. Inkizu, the immediate past president of IFAC, Indian Federation of Accountants, was the jury chairman. This year, Mr. Alan Johnson, IFAC President, has kindly considered to be the chair. So it is IFAC is a big body having association of like Institute of Chartered Accountants, 170 countries like ICAI. So IFAC is chairman is the jury of our this noble award function. So I think by this you can see the its importance, and I think it's the first and foremost that much of famous award across the globe in the field of accounting and auditing profession. So this is the Amit, you can go on jury, please. Categories. You can go on categories. So let me share with you. These are 5 categories: accounting, auditing, economics, and finance, and taxation. So under these 5 broad categories, we are receiving the nomination, and 31st is the last date, and are already 7 countries, including USA and South Africa and UAE. 7 countries has already participated till date, and lot number of papers is receiving. So I would urge from this platform that all of you please participate in this award. It is a very, very prestigious award. Last year we had a ceremony here in India, and this year we are planning it at Dubai. So it's a great opportunity to demonstrate your published research work. It is already published. What you need to do, get it. It's all online process. You just go on, Amitji, you can stop sharing this screen and show ira.ici.org. So what you need to do, you just type ira.ici.org in your browser. You will find a very, very user-friendly website there. Amitji is sharing with you, ira.ici.org. This is the site from where you can upload. It will take around 5 minutes. Submit your paper, you go there. It is on the front side. And these are, scroll down, these are basic information about your research paper. And one click you can submit it, and rest whole process is also online. There would be a technical reviewer panel dashboard. There would be jury panel dashboard. Jury will be knowing. So there is no manual intervention, and it's a blind review kind of thing. System automatically will do. Once you submit, it will be a blind review by the technical reviewers and the jury, and then a powerful jury, including the IFAC president and other 5 accounting bodies president would be there as a jury member. No one will be from India except the president and vice president as ex officio of this jury function. So it is my humble request to all of you. This deadline is going to be it is completing on 31st of this May. So I would urge all of you whomsoever is having any research paper may kindly note down this ira.ici.org. Please visit this site, popularize it. It is a pride moment for India. India is the only country, ICAI is the only institution who has instituted such a wonderful international research award. Kudos to my chairman, the visionary person behind this, who has taken this initiative. Over to Ashish Agrawalji, the Honorable Secretary of Jabalpur branch of CIRC of ICAI, for extending his formal vote of thanks.
Thank you, Amitji. Am I audible, Amitji?
Yes.
Thank you, Amitji. First of all, I would like to thank the Research Committee of ICAI for organizing such a wonderful program. The Jabalpur branch is really privileged to host this program. I would like to give my special thanks to the Chairman Research Committee, C. Anuj Goyalji, for giving this opportunity of hosting this event and enlightening us on the activities of the Research Committee. I would like to thank the speaker for today, Kavita ma'am, Dr. Kavita ma'am, for elucidate deliberation on the topic. We really are enlightened. Ma'am has also responded to the queries of all the members. I would also like to thank Dr. Amit Kumarji and Dr. Amit Agrawalji for smooth conduction of the program. Lastly, I would like to thank all the delegates joining from all the parts of India and abroad. Thank you. Thank you very much.
Thank you, CA Ashish Agrawalji. Thank you, Madhu Agrawal ma'am, and Manish Kausarji, and all the office bearers of the Jabalpur branch for hosting this very, very prominent event. And let me tell you, research is the backbone. Thank you, Dr. Kavita ma'am, for the nice deliberation. And the research is very, very important for every organization, particularly the education institutes and the statutory body like us, which is the second largest accounting body of the world. It is the backbone, and number of chartered accountants, thousands of chartered accountants are very, very active in the research work, but we are trying to provide them the platform. We are trying to handhold them so that their expertise can be utilized for the betterment of the profession, and in turn for the betterment of the nation. And we can prove ourselves a true partner in nation building. So during the last 2 years, last year also Dr. Amit Agrawalji was the secretary and I was the chairman. And in spite of the fact that that year was affected by Corona pandemic like anything, but we initiated a lot number of projects, whether it's the research project scheme or ICAI doctoral scheme or ICAI International Research Awards. And I'm really very happy to share with all of you that we have got very, very good response, and the chartered accountants have responded like anything, whether it is ICAI International Research Award from each and every part of the world. The researchers have responded like anything. More than 100 nominations we got from more than 10 countries. And in ICAI research project scheme, very, very good research projects were undertaken and were completed within the given time frame. And for the ICAI doctoral scholarship scheme, we intend to see that how the young researchers can join this platform, and we can try to handhold them. We can try to help them to see that how they can really do something concrete, not only for the profession, but also for the nation. So thank you very much. And in the end, I will request all of you to please take very, very good care of yourself and your family members. And please get yourself and your family members vaccinated at the earliest. ICAI Jabalpur also can take initiative to have the vaccination camp at Jabalpur.
Sir, we have already conducted 2 vaccination camps actually, sir. One in the month of March and one in the month of May.
But now in the month of May itself, yes,
sir.
So this is the great initiative. So I'm quite confident that all of you will be taking care of the members of the society also, because the chartered accountants are known to help out the society like anything. Thank you very much.
Oh, sir. Thank you.
Manish, Ashish ji kuch kehna cha rahe hain?
Sir, we are a COVID task force is also being created by the Jabalpur branch, and we are trying to help the maximum members and their families and even the public at large in this pandemic scenario, sir.
Great. So thank you very much. Amit ji kuch kehna cha rahe hain?
Yeah, thank you, Secretary Sahab, for your this dedicated efforts along with the whole team led by CM Madhu Agrawal ma'am. So I would request, I know quite few of my friends, my colleagues, when I was in European Union delegation to India, there is a very famous institution at Jabalpur, JIDAS, for development sector, I think. So you people please motivate them, let these people come. These guys were very wonderful guys. I worked with them around 10 years back, and they contributed. So product of JIDAS is very good. So you can reach them. We can have some collaborative programs, joint study and kind of thing. Let me share with you, research somehow as a chartered accountant or as an institution, we were thinking that it's not our domain, but our young chartered accountant is having great interest in this area. And very soon, I think we would be leading in the country. We will be known by the research. We were doing research informally, but formally we will be doing, and we will be known by as a research-led institution. ICAI would be a research-led institution. Let me share with you, last year when sir take over the charge of chairmanship of research committee, we planned 25 research conferences. It is not the routine conferences of ICAI wherein is a conference style of thing where one person is speaking, other are listening. Instead of that, what we plan that we will receive research papers, we will call good researchers, they will present their research findings, and that would be knowledge dissemination kind of thing, a platform where academia, industry, and other things will be work together and disseminate the information. That kind of thing we had in plan, but unfortunately we couldn't have this virtual. It will not serve the purpose if we have it in virtually. Very shortly we will be having such kind of events, and preferably one at Jabalpur. Thank you.
Thank you, sir. Thank you, sir.
Very nice.
So thank you, Madhuji. Thank you, Manish Masalji. Thank you, Ashish Sadwalji. Thank you, Dr. Kavitaji. And thank you, Dr. Amit Agrawalji, CM Amit Agrawalji, and the entire membership of the Jabalpur and each and every part of the state of Madhya Pradesh and from the central region, each and every part of the country. We are having a lot number of members, and outside country also, we are having a lot number of members. Take very, very good care of yourself and your family members. Thank you. Have a good day.
Thank you.
Thank you, sir. Thank you. Thank you.
Thank you so much, sir. Thank you.